H.M. Bangur, chairman of Shree Cement, now joins in. Good morning, Mr. Bangur. It's always such a pleasure to have you on the show. Mr. Bangur, the last time we talked, there was a sense that demand was slightly slow in the first quarter. Higher temperatures, pre-election, there was so much going on. As we step foot into the second quarter, do you feel like demand will see a pickup? I guess there is some optimism around the infrastructure ministry, probably raw material cost. The next couple of years looks good in terms of outlook, and hence in the near to medium term, an uptick in demand is what we should be seeing.
Between the last year and this year, first quarter, as I had said earlier, the demand is quite subdued. Hardly 1% growth or zero growth is there. But India is still growing at the same rate, about 7%. So cement demand for the year is expected to grow at 9% or so. Now, if the first quarter demand is low, then all the pent-up demand of more than 9%, low double-digit growth is expected in the remaining 9 months. Because the cement industry is a replica of the national growth. If GDP is growing, if India is growing, cement demand has to increase.
Right. Sir, I believe in terms of data points, we've seen the transportation of cement through rail has actually gone up 11% month on month in the month of May. June also saw an uptick in terms of visible increase in demand. Historically, this is also a time when price hikes are undertaken by the sector. And with the continuity in terms of the fact that elections are behind us, is it a fair assumption for us that there will be aggressive price hikes coming in from the cement sector?
Price hikes will be natural, and as I feel that not the price hikes are taken at some places, demand supply will be mismatched. Road demand, as you rightly said, cost increase is there because of more dispatches from rail. Roads cannot cope up with the demand which is there. Price rise is immediate. But I feel still that there cannot be a very big price hike. The price hike on the year as a whole will be slightly lower than the inflation. So price rise will be there, but it will not be able to beat the inflation.
While I know there would be a price hike, the monsoon has set itself on us as well. These price hikes are sustainable because on the flip, pet coke prices have also reduced. So your input costs have come off. Demand is expected to improve, but still not looking as good as the industry would have liked. So in case of a price hike, while it may be a one-off, do you feel like this could be sustainable in the next couple of quarters and then have a material impact on your numbers?
That's what I said. Price hike will be there, and the sustainable will be little bit below, not much below, little below inflation. So inflation, if we think is about 6%, then the price hike of 5% is very much natural. It may be delayed by a month, or it can prepone by a month, but this price rise has to come in the year as a whole.
Bangur, Neeraj here. There is, of course, a lot of consolidation happening as well. You are on record saying that you want to expand organically, maybe over 80 million tons by FY28. Would you pursue that strategy, or are you actively looking at inorganic acquisitions as well?
We are going to be 80 million ton, as I said earlier. We maintain the same thing. And even after that, if we find some good opportunity, we are not totally off the radar, but with the aggressiveness in the market for acquiring capacity, our hands may remain full with the 80 million ton. We don't mind. Our balance sheet can support 85 million ton also, with 5 million ton or 7 million ton takeover. But our own strategy of 80 million ton, and then we have not yet discussed, but the things are under plan for 100 million tons by 2030. Till we can get the land and all the clearances, we normally don't announce. And that is why whatever we announce is never deferred.
So, sir, sorry, just to get the clarity, you are saying that for you, growing this organically to 80 million tons by FY28, give or take, is the strategy that you want to pursue right now, because the aggression in the market would make you not very keen on inorganic moves?
Yes,
Got
not
it.
very keen, but we will not be totally off the radar. Some things may really come, and then we will look at it.
Got it. The other aspect, Mr. Bangur, is how efficiently can plants run, and there are multiple layers to it. One is, of course, the efficiency that comes naturally by operations, but two, green power being added, other aspects too. Would you believe that the cost of operations and cost per ton of manufacturing cement for you, or maybe for the industry as well, could head lower over the course of the next 24 to 36 months?
Lower cannot be there. How small the price increase will be there? You are with the tide where everything is going northwards, that the price increase will be natural because of inflation and others. If you can stay at the same level, or if the price increase is 5%, you are only 2% up, that is good. Shree Cement has recently completed 1,000 megawatts of our own captive power. And out of that, 500 megawatt is green power, that is wind, solar, and this co-generation of power, waste heat recovery.
Got it. Okay, so you are saying that it can't go lower even if you optimize costs, let's say 150 rupees by 150 rupees per ton because of various measures. Costs will not go lower, but you will optimize the costs relative to what happens in the industry per se.
Yes, that's what I mean.
Got it. Okay.
Right. So Bangur, I know we keep hounding you about these questions in terms of expansion, M&A, what are you eyeing? A couple of months ago, you had, of course, I read an article where you said that you were very keen on building and expanding in central India and maybe South India. At that stage, there were rumors, of course, during the rounds that you were going to be picking up India Cement. Now, of course, none of that's happened. But is South a market that you're tempted to venture into? And if yes, any sort of conversations on, any sort of targets being identified in that sense? Because there are opportunities that are available at a pretty relatively cheaper valuation from what we saw happening on India Cements yesterday.
Only about a month back, we had started our Guntur unit in Andhra Pradesh, and there is enough limestone there. As the markets increase at much lower cost, we can increase our own capacity. There are brownfield expansion positions in South India as the limestone reserves are high. So still, if some company we may find, we are not very keen, but we are open to the idea. That's all I can say.
Just a quick update. How is it going with the inorganic expansion that you had undertaken in Dubai, in UAE? You want to bring us up to speed with how business is looking there?
UAE, now the market is good. UAE economy has improved, and UAE plant is running at almost 100% with reasonable margin.
Okay. The belief also is, Mr. Bangur, as we come to the end of the quarter, that your quarter-on-quarter volumes, because of Nawalgarh, because of Guntur getting commissioned, might actually see a bump up. But it's just hitting monsoon, maybe not in south, but otherwise. Would we see a substantial uptick? How has demand been in the quarter?
The demand in the quarter was flat, but still we are up by about 6 to 7%, partially because of the new capacity. But new capacity, as soon as it is completed, doesn't come into full force. That will take about 6 months. You have to develop the market, you have to develop the logistics. Only production capacity is there. So it will take about 6 months or so before the new capacity can be fully leveraged.
Okay. In which case, will we continue to see, because you may not be at full capacity utilization currently in quarter one, will we continue to see this optimum capacity utilization and thereby higher volumes in the quarters to come? And do you reckon that demand will support that? I know you started off talking about demand. I'm just trying to understand, because you have newer capacities coming on stream. Will demand support higher utilization levels, sir?
Demand in the country is dependent on GDP growth. As all sources say, the GDP growth will be 6 to 7%. Demand earlier was about 1.5 times the GDP growth. Now it is 1.3 times. The GDP growth demand increase in cement can be a safe bet. So if 7% or 6% is there, 8 to 9% is the yearly growth expected. First quarter growth was subdued. It must be making up in the next quarter. So I expect 10% demand growth, which is substantial demand growth. All the production from everyone will be, the country will be able to absorb. So we are very bullish about the future demand.
Will we see price hikes, sir, if demand is so strong? I mean, in the near term? In the near term?
Price hike will not be there. Demand is very strong, but the capacity addition also has been strong. So we will be expecting price rise of about 5% or so, little below the inflation rate, general inflation rate. That is what I expected, and that is what most likely scenario as per my understanding.
Got it. Great. Mr. Bangur, such a pleasure talking to you, sir. Thank you for taking the time out and all the best for the quarters ahead.
Thank you.